Good day. I'm doing Tom Cruises today. Tom Cruises is a very nice question, and the reason why I do like Tom Cruises is not because of the actor, but because of the way that the question is being asked. It is something different. At the end of the day, once we have done the question, they want from us the statement of financial position for the year ended 31 December 2016. So it's a bit different. It's not an income statement that they want. They want the whole statement of financial position, not an extract of any notes. They tell us comparative figures and notes are not required. So they only want the face of the statement of financial position. Good, let's start reading. Tom operates a small business, Tom Cruises, a sole proprietor, which provides sightseeing cruises in and around the Cape Town harbour. DC is quite popular, mainly among tourists visiting the city, but also the local community. His business is flourishing and he contributes this to his friendly service, well-maintained boats, and his knowledge of the marine life that he imparts on his customers. Besides himself, DC has employed only one other employee since the inception of the business, and his name was Hugh, who assists Tom on the boat during the cruises. Since Tom is such a fun-loving guy who adores the nature and prefers to spend time out on the ocean, entertaining his customers, he tends to neglect his administrative duties as business owner. Tom is your best friend, and since you are an expert in bookkeeping, you had assisted Tom with the bookkeeping of DC since the commencement of the business on 1 July 2014. He approached you again to assist him with the finalization of the financial statements as at 31 December 2016. You are still in possession of the final trial balance for the year ended 31 December 2015. Very important that you have noticed that this was last year's trial balance. And in last year's trial balance, I have revenue, fuel, admin costs, rent, licenses, maintenance cost, wages, UIF, medical aid contributions, depreciation on the boats, and everything up to this 9,000 Rand here. These are all income statement items. So obviously you know what happens to income statement items at the end of the financial year. So at the end of December, it would have been closed off against my profit and loss account. Right. In our very last note here, the final profit for the 2015 year amounted to 168,959. Now, if we go back to our trial balance here and you actually add all the revenue and you deduct all the expenses, you will see that it exactly balances back to that figure that they gave us, the net profit for the year, 168,959. Good. Further on, at the end of last year, they had an investment at Fedbank, a bank account, a petty cash, accounts payable, net book value of boats on hand, debtors accumulated profits, and owners' contributions. Guys, what is accumulated profits? That means that is the profits over time since the inception date of 1 July 2014, which Tom hasn't withdrawn out of the entity, so it's still lying in the business. To whom does it belong? It belongs to Tom. What is it part of? It is part of our equity. So part of our equity is capital contributions plus all profits that hasn't been taken or drawn out of the entity, less all drawings for the current period plus all profits for the current period. Good. Now, we know that all the income statement items should have been closed off against profit and loss. So in the 2016 financial year, that's the year that we're interested in, none of these items would appear anywhere anymore, except our accumulated profits, which is that last amount that they gave us in the last note. But things like the investment and bank account and petty cash and accounts payable and the rest of it, all the balance sheet items, in other words, the statement of financial position items, that has been carried forward into the next financial period. So either it still exists at the end of December 2016 or it has been taken out of the books. Now, if we start with additional information, TC is not a registered VAT vendor. TC operates on a strict cash-only basis and has hardly ever had any debtors who owed money to the business. However, during November 2015, the previous financial year, TC provided a sightseeing tour to the local primary school because Tom was head over heels in love with a primary school teacher, Nicole. The revenue for the primary school tour amounted to 10,500 Rand and was still outstanding on 31 December 2015. So, if we go back to our trial balance here, that is the 10,500 Rand. The relationship between Tom and Nicole was of a rather short nature and came to an end early February 2016, current financial year. The money was never recovered from the primary school as Tom never had the guts to set foot near Nicole again to ask for the money. He decided to rather write off his amount as a credit loss, but no entry has been passed at 31 December 2016. So very expensive short-term relationship this was. So when are we going to write off the 10,500 Rand in the current financial period? So we're going to debit credit losses. Now you will see that they ask us a statement of financial position, but in note number 14 they tell us that the preliminary profit for 2016 before any of those items mentioned was 110,674. So although they don't ask me the income statement, I will have to calculate what was my final profit figure at the end of the day. So that profit figure have to be reduced with an amount of 10,500 Rand. Why? It's the credit losses that we're going to write off in the current financial period. I'll just put them all the same. Okay. So we're going to debit credit losses. At the end of the day, the credit losses is going to be written off against our profits. So 10,500 Rand debit against profits. And then simultaneously, we are going to get rid of that 10,500 Rand, which was carried forward in the current financial year. So that is going to cancel out. It is not there anymore. Good. Number 2, besides the salary-related payables below, TC has no other creditors as Tom pays all his suppliers in cash. Payables for 31 December 2015, again last year, which were paid in January 2016 in the current year, were made up as follows. UIF, medical aid, SARS, 500 in total, 1160. Outstanding at 31 December 2015, paid in January 2016. So what would I have done? I would have debited all these accounts and I would have credited my bank account. So do you see that 1160 there isn't there anymore because that was all paid. So I can now know I didn't carry over that balance to the end of the 2016 year. I actually paid it very early in the current financial period. Good. Then number 4. On the day that TC commenced with business in 2014, now if you go back, commenced with business on 1 July 2014. Tom used 50,000 Rand of his own money to buy the Dolphin liner. Now if you go back to the income statement after the trial balance, owner's contribution, 50,000 Rand. So that 50,000 he took and he bought a boat. That's the Dolphin liner. 1 July 2014. The Dolphin liner has been the only boat owned by TC up to 30 September 2016. See note 8 below. The Dolphin liner was depreciated using the straight line method over an estimated useful life of 5 years and an estimated residual value of 5,000 Rand. Good, and then let's go to note 8, see what note 8 is all about. I said here the Dolphin liner was starting to get too small for the bigger tourist groups. On 30 September 2016, same date, Tom decided to trade in the Dolphin liner for the new bigger boat, the shark liner. The dolphin liner was traded in at its book value at that date. So that means if it was traded in at its book value at that date, there was no profit or loss on the trading transaction. And Tom made an additional payment of $58,250 in order to buy the shark liner. So let's just park it there, then we'll come back because the rest of number 8 is all about the shark liner. And let's just complete the whole story about the dolphin liner. The cost price of the dolphin liner was $50,000. On 1 July 2014, they purchased the dolphin liner for $50,000. It had a useful life of 5 years and an estimated residual value of 5,000 Rand, and we had to write it off over a 5-year period. So the cost price 50,000, the estimated residual value 5,000 Rand, so the depreciable amount was 45,000 Rand. Depreciable amount, what amount am I going to write off over the estimated useful lifetime of the asset? Only 45,000. So 45,000 divided by 5 give us annual depreciation of 9,000 Rand. We bought the boat on 1 July 2014, so the first financial year end would have been 31 December 2014. So in the first year, we only used the boat 6 months. So half of the 9,000 gave us 4,500 Rand worth of accumulated depreciation. So the carry value at the end of year 1 would have been our 50,000 less our 4,500, which gives us 45,500. We've used this boat for the full 2015 financial year, 12 months. So we would have had 9,000 Rand of depreciation in that year. What would the carry value have been of this boat at the end of 2015? It would have been 50,000 less 4,500 less 9,000, which gave us 36,500. If you go back to your trial balance here, account boats net book value 36,500. So that is indeed what we had here. We have traded in this boat on the 30th of September. So for the current year, we have used the boat for 9 months. So 9,000 Rand times 9 divided by 12 give us 6,750 for the current year. The depreciation for the current year has not yet been recorded as yet. Then at the end of the day, what was the carry value of the boat at the date that we've sold it? Was 36,500 less 6,750, which gave us 29,750. That was the book value, the carry value at the date of sale. They told us here in note 8 that the dolphin liner was traded in at its book value. So in other words, that amount that we have there of 29,750 was the amount that we received for the dolphin liner. In order to settle the bill for the shark liner, Tom had to pay in another 58,250 Rand. So the total value of the shark liner would now be the 29,750 plus the amount that we've paid in of 58,250, which gives us a total cost price for the shark liner of 88,000 Rand. The shark liner made its maiden voyage on 1 October 2016. So that's the date from where we're going to start making provision for depreciation. The shark liner is expected to be used on the straight line basis for 5 years and has an estimated residual value of 10,000 Rand. However, the gearbox of the shark liner is expected to have a no residual value and has to be replaced every 3 years. So the shark liner actually have 2 components. The one is the boat. The other one is the gearbox of the boat. On 30 September, the date that we purchased the shark liner, a new gearbox was estimated to cost 18,000 Rand. So, although we paid 88,000 Rand for the boat, 18,000 Rand is actually not the engine but the gearbox. And the rest is the boat. So 88,000 less 18,000 then gives us the value of the boat of 70,000 rand. Now, if you go back here, they say, well, included in the profit calculated by Tom for 2016, that last note was neither the depreciation of the dolphin liner nor any depreciation for the shark liner. Okay, so the boat of the shark liner on a straight line basis over 5 years with the estimated residual value of 10,000. 70,000 for the boat, less the estimated residual value of 10,000 over a 5-year period, and I've used it for 3 months. October, November and December for the current year. So that gives me for the boat 3,000 rand. Then they tell me for the gearbox, it had to be replaced every 3 years. So it has a 3 years estimated lifetime and it had no residual value. So for the boat, 18,000 divided by the 3 years multiplied by 3 months equals 1,500. So now we can establish what was the carry value of our boat at the end of the period. I need that because I have to do the statement of financial position. Now, for that, we need to add the value of the gearbox plus the value of the boat together to give me a total value, because it will still be in my IAS 16 note. You will only have boats classified as an asset type. You won't have separately boats and gearboxes, only the total will appear in my IAS 16 note. Good. So the first thing that I have to know is that I have to make provision for depreciation. It's 4,500 rand on the shark liner. So here we want to update our profit figure. So it's going to be 4,500 rand for the shark liner. And it's going to be 4,000 rand, if I remember correctly, for the other one. Let's just check that one. Oh, 6750. 6750. Doesn't work that well, the grey stuff anymore. 6750 and then 4,500 rand for the shark liner. Good. What are we going to show in our statement of financial position? We might as well do that because we say we're going to complete this as we go along. Tom's Cruises statement of financial position as at 31 December 2016, 2016 rand, assets, non-current assets, and then as a one-line item, property, plant and equipment. And the net book value, the shark that's still on hand, so only property, plant and equipment that they have, 83,500. It is 83,500. Good. Because of the payment, I think we've skipped a few of them. Yeah. Number 5, DC appointed you at a gross salary of 5,000 rand per month. Now, when did he appoint you? Besides himself, DC had employed only one other employee since the inception of the business, and he was you. So when did the business started off? On 1 July 2014. So from 1 July 2014, he has actually employed you. And when he employed him, he paid him 5,000 rand per month, with an annual contractual increase of 10% at 1 January of each year. So when did we actually employ him? At 1/7/2014, and then up to 1/1/2015, he received a 10% increase. But then he also received a 10% increase on 1/1/2016. So he received 2 increases since the date that he was appointed. So if he was appointed at 5,000 rand a month, his salary has now subsequently increased to an amount of 6,050. That's his current salary, 6,050. Both you and TC contribute 1% to the UIF and 5% to the medical aid fund. UIF, medical aid and pay as you earn are all paid due for payment on the 7th of each month in arrears. So I'm going to pay December's in January and so forth. The payment for December 2016 salary contributions were paid on 6 January 2017. So that was still outstanding as of 31 December 2016, so it will form part of trade and other payables. The payment to SARS for use December 2016 pay as you earn was R550. These transactions were recorded when you was paid on 31 December 2016. So you was paid, but the deductions were not yet being paid. So therefore I'm going to create a creditor not for use net salary, but definitely for the amounts that we owe to our third parties. UIF 1% for you and for the employer. So that will give us then a total of 2% of 6050, which equals 121. And then 5% for the medical aid on a monthly basis, and that is also you and the employer as well. So the amount that we're going to pay to the medical aid fund at the end of the day is an amount of R605 that we still owe the medical aid. So we have to add that our trade payables at the end of the year is going to have these two amounts. It's going to have the UIF, which equals 121, and it's going to have the medical aid fund, which is going to be 605. And then they also told us that his contribution for pay as you earn was R550. So that R550 is also outstanding at year end. So pay as you earn R550. Good. Tom does not receive a salary from the business, and he does not belong or contribute to the UIF or to the medical aid fund. He withdrew an amount of $32,456 from his bank account on 30 March 2016, which he used for personal expenditure. This withdrawal is currently allocated as wages on the preliminary trial balance. So what should it have been? It should have been drawings. So under our preliminary profits, the wages expense account was overstated with this amount of 32,456. So I'm going to credit our expense account wages with 32,456, and I'm going to debit our drawings account with 32,456. Remember, drawings is something that's actually been carried out. Well, it was most probably, I don't know where they've put it, but there's no drawings here. So we're going to add here drawings. $32,456. Good. During November 2016, TC paid for Tom's personal car service at the local dealer. The amount was $2,356, and it was posted to the maintenance cost account. Now, it's his personal expenses, so what shouldn't have been? It should have been debited drawings and credited bank. So the maintenance cost account, again, has been overstated by this amount, and this amount being the amount of 2,356. So we have to increase our profits because we're going to decrease our expense of 2,356, and we're going to increase our drawings with that amount of 2,356. Good. Number 9, because of the payment for the shark liner, TC started to run low on cash funds as tourism figures tend to drop significantly during the few months before the December tourism boom. Therefore, TC borrowed R55,000 from his friend Matt. The money was deposited into his bank account on 1 November 2016. The loan bears interest at 12% per annum, simple interest. Interest is payable annually on 31 October. The loan is repayable in 2 equal subsequent annual installments, the last one being 31 October 2018. So when is the first one then? The first one must be then 31st October 2017. And when is 31 October 2017? That is in the next financial year. So the 31 October 2017 payment have to be included under the short-term portion of the long-term loan, which is a current liability. And then the other remaining amount of 27,500 will be shown as a non-current liability. We actually have to make provision for the interest on the loan that is also not being recorded somewhere in the books. So the loan amount was 55,000. We're going to have a 12% interest rate, and the number of months was 2 months from 1 November to 31 December. And that gives us a total amount of interest payable of 1,100 Rand. So obviously we have to reduce our profits for the year with that amount of 1,100 Rand interest paid, interest expense. And we're going to create, under trade and other payables, accrued interest of 1,100 Rand. Good. Just let's deal with the 55,000 quickly in the statement of financial position whilst we are on the topic. Under equity and liabilities, non-current liabilities, long-term borrowings, 27,500, which is the installment that's payable in 2018. The installment payable in 2017 under current liabilities, short-term portion of the borrowings, 27,500. So if I add the two together, it gives me the total outstanding loan amount of 55,000, just broken down into the long-term portion and the short-term portion. TC had an amount of 2,010 cash on hand at the end of December 2016 and a bank balance of 134,483 at the same date. So what do they give me here? If I add the two together, it gives me 136,493, and that is actually our cash and cash equivalents figure for at the end of December. So going back to my statement of financial position on the asset side and the current assets, cash and cash equivalents 136,493 if I add those two figures together. Rent is payable. If we go back here to the original trial balance before I go on, remember my bank and probably my petty cash can never be the same as what it was last year because a lot of transactions actually took place in the current financial year. So those balances there would only have been the opening balance. Remember, we've taken care of that one, we've taken care of that one, we've taken care of that one. So the only other stuff that's left is this and then the accumulated profit of last year. Rent is payable to the Cape Town Harbour for the space the boat occupiers were lying idle in the waters in between trips. According to the contract, the monthly rent increases annually on 1 July in relation to the immediately preceding year's average inflation rate. The first rent payment was made on 1 July 2014 and amounted to 10,000 Rand. You notice that TC's rental payment for December 2016, only 1 month, was still in arrears at year end and no entry was passed to record the outstanding amount. So how much was the rental payment at this point of time? Well, in the first year, it has increased with 6%. That is for the 2015 year. For the 2016 year, it is going to increase with 7%. So what is the total rent payable by him on a monthly basis now? 11,342. The escalated rent over the 2 years. Rent expense is going to reduce our profits with the amount of 11,342. And then that is also accrued expenses that we have to add to trade and other payables. So there we will have accrued rent 11,342. Sorry, 11,342. Good. On 30 November 2016, a group of teenagers paid for a cruise to St. Helena Bay, but due to bad weather, the cruise was cancelled. Tom was planning on using the 4,800 Rand that received from the group to pay Hugh's salary, and consequently agreed with the group that instead of refunding the money, they can rather book another cruise in January 2017. The cruise was done on 13 January 2017. The amount received was recorded as income for the year ended 31 December 2016. Can we record it as income in that year? No, we can't. Why not? Because we haven't performed under the contract. So that 4,800 Rand there is going to be income received in advance. So we have to here reduce our profit for the year with 4,800 Rand, and income received in advance is also part of trade and other payables, and there we would have recorded the 4,800 income received in advance. Various licenses are payable to the local municipality and tourism board to enable tour operators to make use of the Cape Town harbour for sightseeing tours. During January 2016, Tom erroneously paid the annual tourism board twice, and it was agreed with the tourism board that the second payment of 680 Rand will be deducted from his payment that is due during January 2017. So he's still in January 2017, he's still in the future, so it's in the new financial year. That 680 will be subtracted from the payment that needs to happen in January 2017. Both the payments were allocated to the licenses account. So clearly, the 680 Rand must have been added back to our license. We should have reduced our expense account licenses with the 680 Rand, and that is nothing else than part of trade and other receivables, prepaid expenses. It's not the right amount. It was 680 Rand. 680 Rand. Good. Then, lastly, that was the end of the story. So all we have to do now is just to complete our statement of financial position. That 168 was last year's, this 110 is this year's, which we are going to adjust with that. So let's quickly go and have a look what our updated profit is going to look like. We're going to start with our preliminary pre-adjusted profit of 110,674. We're going to add back the drawings, and there's also drawings. We're going to write off the credit losses, the 10,500. Here was the interest expense for the year. Here was the income that we received in advance. Here was the license that we have prepaid, which has increased our profits because our expenses was overstated. Here is our total depreciation for the year. Just to recap, it was the 6,750 and the 4,500 there, which gives us a total of 11,250, and then our rent for the harbour 11,342. So our updated net profit for the year 107,174. So let's go back to our statement of financial position. Property, plant and equipment we've spoken about. Now that financial assets, if you go back to the original trial balance that they gave us, there's only one thing. We have the new bank account balance, we have the new petty cash account balance, but that one there, nothing was said about that one there. So that balance was still being transferred from last year to the current year. And we don't know what the process is. Maybe it's an investment in shares and no dividends was declared, so then there would have been no income on that. And maybe there was income and it was included in the preliminary profit. We don't know. But the fact of the matter is that we had that investment in Fedbank. And so forth, we would have a financial asset which will equal that investment amount of 200,000. Trade and other receivables, that is the last one that we've done. This one, the prepaid license of 680 Rand. And then our cash and cash equivalents is the total that we've already spoken about. It's those two totals that they gave us in note number 10. And that gives us 136,493. On our equity and liability side, capital and reserves, owner's equity would be the 50,000 Rand. Accumulated profits would have been our 55,834, which is that amount there, plus this profit amount after we have actually closed off everything. And that profit amount I also gave us here a note, and that's the 168,959. So the 168,959 plus the other accumulated profit of 55,834, that is the profits belonging to the previous financial years that hasn't been drawn out of the company or the entity as yet. And that gives us that 224,793. Then our profit for the year. Here we have worked out our updated profit for the year, 107,174, and that is actually also going to increase our equity for the year, 107,174. The drawings for the year is going to decrease our equity figure, and that is those two amounts, the 32,456 and the 2,356. That's going to be a minus. It has to reduce that figure, so it gives us net equity for the year 347,155. We've spoken about the long-term borrowings and the short-term portion of the borrowings, and then our trade and other payables. Let's see here. That was our rent payable of 11,342, our interest payable of 1,100, UIF 121, medical aid 605, pay to earn 550, and income received in advance. And that should be all those figures that we have actually accumulated over there. And that gives us then at the end of the day a total of 18,518. And then my statement of financial position balances 420,673.